My name's Denis Wood. I'm executive chairman of a company called KGL, which is a public company here in Australia. And its prime drive is to develop a copper mine at Jervois, which is halfway between Mount Isa and Alice Springs in the Northern Territory.
Denis, thank you very much for the introduction. Good to meet you. You spoke with Matt about 6 months ago in early January, and you had just published, or you just updated your feasibility study in 2022. And one of the plans that you had when you spoke with Matt 6 months ago was to go in and to drill more high-grade material. Your project has got 24 million tonnes thereabouts of around 2% copper, but I think the plan was to kind of drill extensions and find more high-grade material that could go into the mine plan. And I just wondered how you're getting on with that plan.
Well, it's going well, although that we did shut down our drilling on site for mid-December and didn't start till the 1st of March. And the reason is that there's a lot of wet weather around in that period of the year. So we've only been going for a couple of months. We did bring in a new drilling company, and they've struggled to get started to a certain extent. So drilling's been slow. There are two jobs that are on. One for one rig is expanding the Marshall and the Rockface resource. And the other rig is, so we get finance, we bring the reward open cut up to measured JORC status.
How many kind of pods or mining areas will you have in the overall project?
Okay, the overall project at the moment's got two open cuts, one at Bellbird and one at Reward. And it's got three undergrounds, one at Bellbird, one at Reward and Rockface. And Rockface is the latest one that we found. We found Rockface in my time, and we've proved that up. That's in fact got a grade of 3%. And
you mentioned Marshall. What's Marshall?
Well, yeah, it's a bit complicated. Marshall, in my opinion, is just part of Reward, but it is slightly separated from Reward, but it's fundamentally in the same mining part of the operation. It's open cuts that fundamentally in the same open cut as Reward, and the undergrounds are running parallel beside each other. So it's in my opinion, it's part of Reward, but theoretically the geologists separate it, so it's got a different name.
It's a complex bit of geology here. When I looked at the feasibility study and I looked at the presentation, you talk about kind of subvertical, structurally controlled lenticular bodies. When and kind of chutes and pay chutes and things. There's also the overall resource you've got is just under 24 million tonnes, 23.8 million tonnes, and within that, the mineable. What gets mined, I think, is about 11 million tonnes or 11.7 million tonnes. So it's about half of your kind of overall resource is your mined total. When in the work that you're doing now, are you kind of drilling for new areas outside of that 24 million tonne envelope, or are you trying to kind of pick out extensions within the 24 million tonne envelope? Well, I'm just trying to get the understanding of kind of what the prospectivity looks like.
Like I said, this place has been drilled since the 1930s, and not being rude to geologists, but you put them on this site, you've got about 12 kilometres of this massive vertical structure that has been turned around into a big J. It's actually turned around into a U, and it's been forced by the massive fault on our left-hand boundary, the Jervois fault, and it's moved about 6 kilometres, two separate moves. And it's dragged this structure around, which caused the mineralisation. So there's a lot of mineralisation all the way around this big, massive J structure. And in fact, Bellbird's about 7 kilometres from Reward, but everything between them is a potential, and everything the other side of them is a potential. So what I've done since getting on board, because I have experienced this before, is I've focused on increasing the resource. When I joined the company 7 years ago, they had the Reward open cut and the Reward underground, but we've almost doubled the Reward, more than doubled the grade of Reward underground. When I joined the company, the average grade was 1%. It's now 2%. So I've focused on the higher grades, and I've focused on expanding the current mines. You are right. There's a lot more tonnes there than in our current mine. That's not to say we won't be mining it, but that's not to say, a lot will depend if the copper price goes to where they think. That will probably, most of that will come into the mine plan. We have got a reasonable cut-off grade at the moment, and that once you get going, and chances are, depending on the copper price, then a lot of that will come into play. At the moment, we're working on current copper price, and we're working on having the necessary sustainability in the process for getting finance.
So does that mean, when you talk about kind of that you've been focused on expanding resources and picking up the grade, does that mean that you really look at trying to define where the high grade shoots are and then drilling those out? So is it kind of quite close based drilling? Well
experienced in a lot of this, and I'm not a geophysics fan, but the downhole EM process on our site works magically in most of the cases, and quite frankly, if you look at the cross-section of our downhole EMs at Rockface and the mine design, they're almost identical. So at Rockface, for instance, the downhole EM told us where to drill. If you miss the downhole EM, you get nothing. If you hit it, you get a really good grade and hole. So the geophysics has worked. So what I've effectively done is used downhole EM as pretty well a guide everywhere, and tended to use that to locate the better grades. And
I wondered, because on your website you talk about kind of being an innovative exploration company, or kind of using some secret sauce. I just wondered what that was, but I guess you're referring to the downhole EM.
Well, it's saved the company. When I come back, roughly 7 years ago, I didn't come back. I was pulled in because I know some of the major shareholders. We got common investments. And with my experience building mines and stuff with no income, which is a handicap, they hauled me in, and what I did is I underwrote a rights issue to keep it going for 6 months, and I took over. That 6 months was pretty well doing the work, and fundamentally we were so lucky. We drilled a hole at Rockface and found a good intercept. We'd run the downhole EM, found another conductor. And the first 18 months of my time with the company was only with 3 or 4 staff, and really just focusing on, we'd drill a hole, run the downhole EM, drill another hole, run the downhole. We followed it all the way down at Rockface, substantiated it, and by then we built up credibility again and raised the money, which really costs a lot of money to do the infill drilling, because the infill drilling there's like 50-metre petition, so there's a lot of holes we had to drill there to make it a resource, but we've done that. And currently what we're doing is going deeper again at Rockface, which is slowing our drilling down a fair bit, because we're now into a kilometre, 1.3, 1.4 kilometres. And because it's vertical, we've got to come at it at a fair angle. And because it's 1.7 billion years old, it's pretty rough. So, doing the drilling is a slow, expensive process, but we have infilled it, got the resource that we reserved necessary at Rockface, but now we're looking at, all right, so if we're going to do that mine down, what have we got below us still? Because initially I called it off at about 880 metres, I think, because of the cost of drilling down there and the cost that we had to run into to do the infill drilling. So at the moment we currently got a hole down about 800 metres, is about halfway to where it's going.
And just looking at kind of budgets and numbers and plans and things, at the end of March, your March cash figure was 13.5 Aussie, and you've just 13.2, and you've just raised 13.5 through a kind of an entitlement offer. So aggregate those two, kind of 26 odd, bit of running costs, a bit of drilling. You're probably sitting somewhere between 20 and 25 million Aussie. Have you got a kind of a drilling budget in terms of meters or dollars for this year?
Oh yeah, we've got. What we did is we raised enough money. What I did is I did try to raise a lot more. I didn't try. I said it. So I wanted to give, because the share price is miles lower than what I think it should be. The company value at the moment's like 60 million or something. It's we're talking about a potential copper mine with all the licenses to go, and a market not too far away. We've got our water, we've got it all. So, given it's undervalued, in my opinion, I do rights issues. I don't have them underwritten, and I don't, I don't need help to raise them. And the fact of the matter is, we have quite a substantial amount of the shareholdings with ex-mining geologist people that are fairly well off. And quite frankly, the reason our share price does fluctuate a bit and is probably lower than we would want it, I would say probably over 75% of our company is not traded. It's people that are sitting on it waiting for the copper price to go up and us to get into development, because there's people, I mean, that's how I've survived my life and how I've made my money. That is, you get them to run, and that's when you get the real return on your investment. Now, there's no reason to suspect this one won't happen, assuming copper price goes up, and the copper price does become as essential as it should. The globe is going to keep going green, and given that the current costs of the major mines in copper are dropping in grade, and when you go to Chile now, it's 0.4, 0.3, where I've sort of maintained ours at 2. Our grade's average grade for all of that's at 2%. So we're standing in a good shape to go. So, all greenfields have got a high risk to go. But, we've got everything we need to go. Now we just got to raise the finance, and that's what I'm working on, not on raising the finance. I'm working on how I can raise it in today's climate by making sure what we can do on time, and the design will be correct, which is where we are now, and we're making great progress.
Goodness, lots to unpack in all of that. But I will talk about kind of the strategic plan on how to raise finance, and I will come back to copper price and copper grade. But just let me just ask a question about your shareholder register. You talked about having kind of lots of kind of industry professionals in there, about 75% of the shareholder not trading. Can you kind of give me a bit of a breakdown in terms of, are there institutions, family offices? What do you know about your shareholder register?
Well, I've got to be a bit confidential on this. I pretty well know, probably 75% of it I probably know quite well. A lot of them have come in because I'm there, and a lot called me in because they wanted me there. And so obviously I do know them. And, Anthony Salem is the largest shareholder, and he's 28%. I'm the second largest shareholder, and I'm about 10. And there's 2 others getting close to 10 that are good mining contacts. But it's a lot of them are not traders. In fact, they all participate, and as I can do when I do the rights issues, what we needed to keep the 2 rigs, and there's a lot more work going on here, like mine design, testing, geotech work and stuff. We've got enough to get through I'll comfortably get through to the end of the year. And one of the concepts, if the drilling company had made more progress, I probably would have been justifying a 3rd rig coming back now. So what I did because the share price was so much lower than I thought it was worth, I offered it to the shareholders. So any shareholder that wanted to participate got to participate. I did make sure I was covering the minimum amount we needed by having some of the larger shareholders, including myself, guarantee that they would participate. And there's 3 of us that guaranteed we'd participate, and that was about 45% of it. And
when you come to let's talk about the copper price and the kind of the grade. I noticed that in your feasibility study, your base case price is $4.23 per pound copper, and it gives you a 21% IRR, just under. What does it look like at, I don't know, 380, which is where we are today? I mean,
it's actually funny enough. I'm not sure what the exchange rate is today, but I have been asked that question a few times since then. And the fact of the matter is that the exchange rate's helped enough that it's pretty well compensated for it. I think we did the fees at 70 or 71. Yeah, so, it's now 60 something. So the exchange rate's really quite important to our what the cost is that we get back in Australian dollars.
So in essence, you're driven by the Aussie dollar copper price.
Yeah, well, the fundamentals are we're not a current mining company or exploration company, so all our costs fundamentally are in Australian dollars.
Good. You've got 11.7 million tonnes in the ore category, proven and probable reserves. If you mine that at 1.6 million tonnes per annum, that gives you 7.3 years of mine life. But the feasibility study talks about an 11.5-year mine life. I just wondered how, what that discrepancy
I'm not sure we've got 11.5 years of mine life. And yes, you're right, there will be some years where we're not doing 1.6. And there's two reasons for doing that. We're not like Reward Underground, Rockface Underground. We've got to slow the plant down because the grade's higher.
Okay, so it's just a scheduling thing.
Yeah.
Okay, good.
And of course, one of the things I'm looking at the moment, we do at Reward Open Cut, which will be our first pit, I believe, and we do mine a lot of lead zinc as well. Now, at this stage, it's not in the fees. We do mine it, we do store it. So one of the things in the optimising I'm looking at is there's some periods in there where because currently, as it all says, our contract for the offtakes with Glencore at Mount Isa for the smelter there, they also do lead zinc. And so we are in a position where our biggest cost is the mining cost. So just to process some of this stuff that's not copper, we can get lead zinc for. So that's the sort of thing I'm adding to our numbers at the moment, but I've still got a bit of work to do to justify that. But they're the issues that still add value.
And the back end of the feasibility study, on the kind of the competent person's comments, they do raise a question about deleterious elements, and they mention bismuth and fluorine and uranium. Yeah, I mean, you're a metallurgist. Where are you in the metallurgical process of understanding what goes into the concentrates?
Oh, we've done, as part of the fees and the plant design, we've done a lot of metallurgical testing. We had a company called KGL Resources running that. And yes, we do have, biggest problem is bismuth. We have a reasonably high bismuth. Now, uranium is not very high, it's quite low. We do have 1 year at Reward where we do hit what could be considered rejection level into China, for instance, but it's only a little bit and it's not high. It's not nowhere near high. So I think one of the reasons this will be a value in some places is it will be able to be blended to bring the uranium down on, particularly a lot of the stuff coming out of South Australia, which I think is part of someone's plan. The bismuth is high, but long and short of it is it's only really high in the open cuts, but your open cuts are much cheaper to mine. So yes, we will be paying a penalty, and that is in the fees. The penalties are in the fees. And yes, there will be penalties for bismuth, and it's the first couple of years where they will be the highest. However, it's during the lower mining costs, so it's the best time to pay them.
That brings up kind of an idea that the metallurgy and the mineralogy seems to be quite variable over the different pods. Is that something that you've had to add into your scheduling on top of the mining, as another factor you've had to cater for?
Yeah, well, the fact is, we're not exporting it, so it's really all we're paying is penalties for it. So doing what we're doing, the best option for us is to develop the cheapest stuff first. So yes, in the early years, particularly at Reward, although Reward, it gets better grades as it goes down, the grade will be down a little bit and the bismuth will be higher. But, I mean, you've got to start where the mining cost is the lowest. Given that we're not exporting it, the qualities will change over time and get better and better and better as we go, because the deeper we go, the better it gets. But long and short of it is, because of the arrangement we have on the offtake, we can afford to do that.
So here we are in the middle of the year. The feasibility study came out at the end of last year. You've got your mine plan you've got your mining permits. You're doing some exploration drilling. What are the other drivers, and what else are you planning towards the end of the year that's going to take you towards kind of an investment decision? Okay,
well, fundamentally, and what I'm focusing on is building the company now to get there, to be able to do it on time. So we're working on the current mine plan and the current process plan, which is fundamentally most of the costs, really, like the significant parts of the cost. And what we've got to do is, we're not so much with the mining, because we obviously we're going to use, we're not a current mining company, so we've got to use to get finance, but also to do it and not go broke, we're going to use tier one operators, contractors. We're working with them at the moment, and to make it as practical as we can and keep the costs down as low as we can, particularly for the first 10 years. So we're looking at expanding the open cuts a bit. But the long and short of it is, we're now focusing on building a team. At the moment, we're very short of, we're putting on people now. We're interviewing and looking at putting on a team to actually bring this into production. We're actually working on that team now. We're working closely with the companies doing the process plant and the mining, very closely. And we're looking for people to come in, like a project director. I'm looking for a CEO to give me a hand. And, start building up the team for it, because the board and myself would like to be in a position before the AGM in November that we can make the decision. Now, we've got a lot of work to do, but we are making a lot of progress on designing things. I've got some control of some of the major suppliers for the process plant, and given I've got a substantial experience there. In fact, I was a director and owned 23% of Sedgmans for a long time. I was working in America in charge of a massive engineering construction company. So I fully understand what we've got to do, and to get it done in the middle of Australia at the moment with current labour issues, what I'm fundamentally doing is a lot of off-site design and construction and delivering it to site ready just to bolt together. And it's...
What are those labour issues? I mean, is it just ferociously expensive and you don't have skilled workers?
Sorry?
What are the labour issues?
Oh, people are just not available in Australia. It's even been a problem with our drilling. And I brought a company in now to manage our camp, because it was a struggle for me just finding chefs and campies and stuff to work there. So I brought a company in from Darwin that professionally runs camps, so I don't have to worry about if the chef doesn't turn up, because finding, it's almost impossible at the moment. But the drilling companies had a lot of trouble finding drillers' assistants as well. It is very hard in Australia at the moment to do something like this and be sure you're going to get the labour to do it. And that's why we are using tier one companies with their own people. That's why I'm designing as much as I can to come from off-site, which fundamentally is a smart thing to do with all sites anyway.
But why is it so hard to find the labour? Is it because it's a boom time in Australia, or is it because people don't want to do this kind of work anymore?
Look, I can tell you it's all industries in Australia, and it doesn't matter what business it is. Finding labour in Australia is quite difficult at the moment.
Amazing.
I don't know what's driving it, but I particularly in mining, and because there's so many anti-miners around. But I've always employed graduates out of uni and trained them, and I've got two with me at Jervois. One's been with me 5 years, and one's been with me 4 years. I brought them out fundamentally employed them out of uni. Now, because they've been with me so long, I wanted to move them up in the system so I didn't lose them. Having people on site, geologists on site for 5 years is unheard of on that site. But they're invaluable because it is a difficult site to fully understand, and nobody's there yet. We do know there's a lot of different minerals and a lot of resource, and we're nowhere near finding what we do. But long and short is, I went out now late last year to find two more out of uni, to employ two graduates out of uni. I did. I had to get them out of Indonesia. I'm not joking. It's like, it really annoys me that our universities, it's not the university's fault. I think it's the training of the people to go to university. And in the old days, I mean, even my daughter's a process engineer. She did it at Queensland Uni. They're not doing it anymore. And, I just think, we also, things might change a bit now because we've had such a boom in iron ore and coal. Western Australia with the iron ore, and Queensland in particular, and New South Wales with the coal. They've obviously been grabbing everybody they could. However, they're both coming back down now. I mean, coal, I think, is about a third of what it was 6 months ago. And I think iron ore is about the same. So, that may free up some people from those mining areas. And, of course, mining areas in Queensland and New South Wales and West Australia, where most of it is, they're well inhabited, lots of people. We're in the middle of, nowhere really.
Thank you for that. I found that really interesting. Just coming back to the financing plans, are you looking at this as a sort of traditional mix of debt and equity?
Yeah, look, I've done very successfully done a couple of mines from scratch without an income. And what I do know is you don't go and annoy the finance industry until you actually got everything solid. And we are getting closer and closer. I do have enough experience and enough connections with some of the finance companies that I'm obviously talking to them about what they'll be looking for and what they're looking for. And, in my time, it was like 60-40 you could get. But nowadays, it's probably going to be 50-50, depending on how the number goes. So that's changed a bit. But the long and short of it is, once I get comfortable that I can do it on time, I'm pretty sure we will be able to raise the finance. And yes, I usually use significant banks.
You've effectively alluded to the target date of November. It's when you want to get everything solid. I mean,
well, we'd like to. We've got enough money to raise to get to there. And quite frankly, I was planning this year about June, about now, to bring a third rig in, if we'd got enough proven from Watface or Marshall to bring in a drill rig just to focus on expanding that while the other one kept doing what it was doing. Unfortunately, we haven't really got enough results out yet. But yeah, I'm of the opinion that by then we should be going out. And I believe with where the negotiations, because we're fundamentally pretty well picked who's going to be doing the work, and I'm now in the final discussions with them on their final costing. So we've got a bit of optimising to do, but that optimising, when you're building an operation like this, that'll carry on forever, even while you're mining. It's just no way. But we've got to rule it off now to be able to do the numbers and stuff to satisfy the finance companies. And we do have, I do have the major shareholder system in our company such that we won't have any trouble meeting our 50%.
Good. So that kind of just leaves me to ask, what do you see the news flow being during the course of the rest of the year? How do you plan to keep the market updated?
It is difficult because, as I said, the drilling, even if the drilling company was going well, the holes at Rockface would still take a month. And the other ones that we're drilling, the other rig is on infill drilling at Reward Open Cut. I've done the Bellbird Open Cut. It's now up to measured. We're probably halfway there. So we do put those results out as they come in. They're coming in they're very positive and very good, which was the same at Bellbird. And but really, it's that drill rig's of no real value till we redo the JORC, and it's no longer indicated. It's now measured. So that's the step forward. But unfortunately, that's going to take probably 4 or 5 months this year to drill the holes. And at the moment, because of the current situation, we've got to wait forever for the assays to come back. So that is what's taking. In fact, we're just starting to get assays back now that come from the holes we drilled in March. It's quite disappointing.
So in effect, you're saying kind of hold your water. Just kind of it's steady as she goes. Trust the process. You're going to be drilling, releasing results as they come, and then later in the year.
Well, I think I expect there'll be some positive announcements. I'm assuming that once we get a bit more positive in some of the process, we'll be able to get some assistance from the government. The Northern Territory government's just added copper to its strategic list. The federal government hasn't yet, but I'm sure 3 or 4 other states have. It won't be long, and it'll be off. So we're now in a position where we can go. So we are coming. We're obviously in a position we can gain some support. There's nothing I can do at the moment because of copper price on certain respects. But once once people start to realise, and that the current projection is it's going to be a serious problem in 12 months' time. So, you know, and the current global cost of mining copper will be going up because the grade's going down, and you go to places like Chile, there's a lot more going on there now with government interference and people costing more than it has been for years. It will also start to go up. So if necessary, we might have to wait for the copper price to go up, but I certainly at today's cost, well, the day's exchange rate, it might be a battle to get finance, might be. But one of the reasons I want to take it to a 15-year mine life is, in fact, that will help as well. And that's what our current target is with the drilling at Rockface and Marshall.
Okay, good. Denis, thank you very much. It's been a pleasure getting to know the company better. I wish you all good luck during the course of the rest of the year.
And, thank you very much. I look forward to talking to you later this year and show you some pictures of the copper coming out of the ground.